Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be focusing mainly on the expected decision by the SEC whether to approve or deny the ETF applications. The deadline day is Wednesday this week, so we are expecting a decision by either today or tomorrow. So what I'm going to do is to give you an insight into exactly what could possibly happen just by looking at the charts. I'll also look at the 60-day cycle and how that may well play out depending on how the ETF decision goes. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So always do your wider research before you make any investment decisions or any swing trade decisions. Okay, I want to give some background in terms of exactly how this ETF decision has become so important. Because if we go back to the bottom of the market, at the end of 2022, we bottomed out here at 15,400. And then we created this inverse head and shoulders pattern over here at the neckline of 25,200. So what happened here was that we broke above the 25,200, came back and found support, and in all probability, this should have gone much higher here. For whatever reason, we came back and retested it several times over here. And with a higher probability, this should have really fallen down much lower. But it didn't do that because something happened at this point, and that was the ETF story broke. So as soon as the ETF narrative started to unfold, what we've got is an ETF-led recovery all the way up here. And this is where we are. We've been consolidating over the last month or so. The reason why this is very important that we know that the majority of this move from down here to where we are currently at around about 44, 45, 46, the reason why this is important is because should we get a denial this week, then the probability is very, very high that we're going to come back down and give up most of this gain that we had over the last many months. So that's the first thing that would actually happen from what I can see in the charts. Because the ETF narrative has driven this price to where we are currently at the moment, then if the ETFs are denied, then this would be basically given up, and the chances are we're going to come back to some of these support levels down here. And while there is a neckline here at 40, I would expect this to be broken, and there is another support line here at 38, which I think would also be broken. The higher probability is for support to be at around 35 or around the 32,000 mark. So this is where I would expect, so any denial of the ETFs this week, I would expect the price to fall all the way through all of these support levels right down to around about the $32,000 mark. That's what I would expect, simply because this is the narrative that's driven it up there, and the chances are, the probability is that we're going to give up most of those gains should that happen. And I want to make clear that I'm not expecting that outcome. I think with a higher probability, around 90%, we will get an approval here. But because nothing is guaranteed, we always have to look at the alternative scenario, and that is the alternative scenario from what I can see. The second option is obviously going to be an approval this week, and that can go several ways in terms of the charts here. And while many people think that this is a sell the news event, and it could well be the case, this story may offer an alternative. And that is that when you consider that less than half of the financial advisors who want to have a Bitcoin ETF, less than half of them are expecting an approval, then that means that more than half are not already on board. So that tells me that as soon as an approval is actually given, many of these advisors will be advising their clients to get on board. So that would negate a sell the news event. And if it did actually become a sell the news event, what you would expect is for the price to go up higher in terms of the initial euphoria of the approval before a fall back down to the $40,000 mark. And what I would expect is that if the price did fall below the 40, then the chances are we're going to do exactly that. Go back to the $35,000 mark down here one more time. So a sell the news event will again give up most of these gains here before we consolidate and then go back up again over the next few months. Because a sell the news event is really all these people who have actually climbed on board here will be wanting to take profits. So most of these people will be in a profit and will be prepared to sell all the way down to around about the $32,000 mark. Now, the third option I see here is that once an approval is given, then you would expect a big surge in the price over here. And this is where really it becomes critical. The third option is probably the most likely scenario based on the 2004 gold ETF that we got an approval at that point, because this is what gold did. We did have a pullback a little bit, but then it just went up on a big run for many, many years after. And the characteristics of that surge is what I'm going to be looking at. So if we get a big surge up to about 50 or anywhere between 50 and 60, let's say, anywhere up here, I would not expect this price then to be falling back into the 40s one more time, in the short term anyway. So any developments up to this level here, between 50 and 55, I would expect some sort of a consolidation at the higher level for the following 2 to 3 weeks, based on the 60-day cycle, which I'll go through in a minute. But if the price did fall back down into the 40s again, this would be a red flag. Then I would expect a 30 to 40% decline from whatever this is here. So the question is how far this could go up. And it's really anybody's guess. But if you've been watching my videos here, you'll know that I've been playing with the narrative of the pi cycle. And the pi cycle is currently at 59,600. So it is entirely plausible for the price to go all the way up in the euphoria, hit the 59,60,000 before there's a 30-40% pullback. And a 30-40% pullback from the pi cycle of about 60,000 is going to give you around 42,000 all the way down to around about the 35,000. And this looks quite plausible because the chances are, if the price does get up here, is going to become extremely overbought and extremely overheated. And there will be temptations by the smarter investors to actually take profits here. And that should really bring the price to much lower levels. Maybe retest this level here around the 40, 42, or if we break that, it'll probably be around about the $35,000 mark. That to me seems the more probable likely outcome this week, that we see a big move to the upside and then consolidate for about 2 to 3 weeks into the 60-day cycle low in the middle of February before coming back down into the 60-day cycle and then beginning another new cycle. So I'll go through that in a second, but I want to cover the fourth scenario as well. And that is really based on the left translated cycle that I've been talking about for quite a number of months now, that there is a possibility, albeit about 20-25%, that we have this time around not a right translated cycle into the 4-year high around the end of 2025, but this time around about the end of 2024. And the signal that will be a clue as to a left translated cycle to finish at the end of 2024 will be the halving here. If the price now this week starts moving higher, and by April this year, when we get to the halving, if we're knocking on the door of 69 and 70,000 here, then I would suspect that this is going to be a left translated cycle with a blow off top at the end of this year in 2024. But if we go like this, coming back down, then the 4-year cycle is still going to be on. So these are the two pathways that this price is going to go over the next 1 year or 2 years. And there are a lot of theories out there as to the top price for Bitcoin in this cycle. And you hear a lot about this time around that we're only going to get to about 70,000. Some are saying around about 100,000. And there's obviously other ones going up to 500,000 and 1 million as well. The truth of the matter is that this cycle cannot be judged by the previous cycles simply because there is something on the table which has never been there. And that is the ETF approvals. Whether we get them this week or whether there is a delay, sooner or later we are going to get that. And that's going to have an unprecedented effect on the price. And that price could be anywhere between 69,000, the previous all-time high over here, and that can go anywhere up here. And I wouldn't want to hazard a guess. And that is where we have to use our exit indicators to give us some sort of a signal whether we've now topped out in this cycle. And I've been through those exit indicators in the past, and I'll go through them in the future as well. They're incredibly important and incredibly accurate. And we will know through those exit indicators when we have reached our top. So there you have it. You have these types of different scenarios which are going to play out this week. And the reason for my third option being the more higher probable play is that if you look at the 60-day cycle, it's really setting up very nicely for that third option to play out. Whether it does, only time will tell, but I can only give you my insight into why I'm thinking this. And if you look at the 60-day cycle here, the current cycle runs from this point here, where we bottomed out there, and the end of the cycle should be around about the 9th or 10th of February. So this is the 60-day cycle currently we've got. And today we are on day 28 of this cycle. And as per usual, during a bull market, we would expect a right translated cycle, which tells us here that coming up to the midpoint of this cycle, we should get a big surge coming up with the approval, hopefully. And that would then take us to a higher high from before the midpoint to give us a right translated cycle. How high this is going to be, we don't know. But my expectation is that if we make a big higher high over here over the next few weeks, then we can have a play into the low of the 60-day cycle. And that can bring us to these points here, around about 45, back to the top of this level here. Or if we're going to have a deeper correction, to come back down to these levels one more time, around the 42,000, before we start the next leg of the next 60-day cycle. So that seems to be a very logical play from where we are currently. And those of you who are interested in the Bitcoin miners, you will know that we have a Bitcoin miners private members club here, where we run a long-term portfolio, which we actually started at the beginning of 2023. So this portfolio that we started with the Bitcoin miners, because they're a leverage play. So this portfolio started on the 6th of January 2023, when we actually got the bottom of the bear market. Very few people on YouTube actually called the bottom. We did actually dollar cost average right at the bottom of the bear market. And these are the results that emanated from that. So our target, which was $1 million by the end of 2023 or by the halving. So we've still got a little bit to go, but up to now, this portfolio has now come to an end at the end of 2023. And the end result so far is that we've been able to get 295%. So our capital of 110,000, which we started at the beginning of 2023, ended up at the end of 2023, 12 months later, at 434,989. And this week we've started our 2024 portfolio, where we've rejigged all of these based on exactly what's been happening in the charts over the last 12 months. We've now reformulated and rejigged all of these to create our portfolio for the next 2 years. And our target, I can tell you, is not 1 million, but because of the leverage play, I'm expecting at least 5 million from the new portfolio. And the reason for that is very simply, if you look at the comparison of Bitcoin with the Bitcoin miners, as you can see with the Bitcoin miners over 2023, there was a 295% turnaround. And if you take the growth of Bitcoin over the same period from January here to the end of 2023, at the close of play, Bitcoin grew by 167%, whereas the Bitcoin miners went up by over 290%. So the Bitcoin miners doubled over the price of Bitcoin. And you would expect this to actually increase over the next 2 years because of the leverage play that we had. If I give you an example from the last cycle, because it is after the halving that the fireworks really take place with the Bitcoin miners. And in the last halving here with Marathon, you can see that from the point of the halving here, the Marathon price to the end of the bull market grew by over 136x. Whereas Bitcoin from the halving in May 2020, which was about here, to the 69,000 top that we got, grew by 7 times. That's almost a 20x leverage play on the Bitcoin price. So the Bitcoin miners grew by nearly 20 times the size of the Bitcoin growth. Certainly, there is a leverage play. That could be 5 times, 10 times, or even more. And if you're wondering what we do with the Bitcoin Miners Club, we have our objectives for the private members, where we have a long-term portfolio, which I've just shown you just now. So we're now starting a new portfolio this week, which I've presented to the private members. And our long-term portfolio is actually added to by the ratios method, which we're using to add to that long-term portfolio, as well as using swing trades to do exactly the same. So we use these 2 methods to add to the long-term portfolio over the duration of the 4-year cycle. And currently we have 4 swing trades with the Bitcoin miners, which we're expecting to ride with the ETF decision coming up this week, when we have an ETF action plan that we will be responding to depending on what decision is made this week. So our journey with the Bitcoin miners is really between where we are now with Bitcoin until the end of the market. So we have a 2-year journey if it's going to be a 4-year cycle, or a 12-month journey if we topped out at the end of 2023. 2024. So between 12 and 24 months, that's our journey with the Bitcoin miners to have the leverage advantage with the Bitcoin miners over the Bitcoin price. And if you want to join the private members club, it's very easy to join. All you have to do is click the join button here, and for the price of a coffee per week, you can join us on this wonderful journey, a very exciting journey that we've had. And as you've seen already, with the long-term portfolio growing by nearly 300% in 1 year, and for the next 12 to 24 months, we're expecting a much bigger leverage play to the growth of that long-term portfolio. Okay, so we'll leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe and to turn on the notification bell. And if you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.